Stocks hit records and at the same immediately print a bearish engulfing pattern, which was immediately followed the next by an inside day pattern. I will explain what those patterns look like and do they mean anything in the context of current trading. I think the volatility could rise as a result of all of this in the next few weeks. We'll see again where this goes, but by and large the long-term patterns are to the upside. We are trading to the upside only. We will look at two of the trades actually done by a subscriber for Groupon and IBM, highly successful option trades, and we will explain how he did them and which options he chose. We will also look at gold, which could be exhibiting a double top, and I think we will also cover natural gas, which bounced off resistance. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, May 24th, 2024. As always, please hit the like button, subscribe to this channel, share this video. These actions are what keeps this channel going and also improves the rankings of the video so more people can see them. If you're a subscriber, stay tuned. We will be covering various securities. For example, market breadths will be covered in the market members only section. There will be quite a bit of market breadth coverage. There are some interesting patterns there. Ethereum trade, I'm long Ethereum myself. British pound crude oil, various ETFs, large cap stocks, as well as various speculative securities. For example, Iris Energy. I'm a long Iris Energy myself. As well as some of the other securities, as well as gold related as well. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com market trading indicators, which you can see on this chart, this green, blue, red, and yellow lines. You can find out more about them by going to the description of the video and following the link. So the way we trade basically is as follows. We wait for security to... There are two ways to do this. So there is one initial breakout when initial security at first was below the yellow line, and then eventually it rose above the blue line. We just buy it there. But once it's already above the blue line, we need a pullback towards the blue line to again initiate new positions. So this is exactly what we did. This is exactly what we did back in October, November of 2023, and you can see that this was a very successful trade as it went to new all-time highs. So let's look at the current picture. The current picture is a little bit more confusing. However, perhaps it's not. So this pretty significant rally from the lows in April until the highs in 23rd of May, yesterday, 2024. So first of all, we had a bearish engulfing pattern. So this red candlestick from 23rd of May completely engulfed the previous candlestick from 22nd of May, so that's a bearish engulfing pattern. However, so far we didn't really have any follow through to the downside, so this bearish engulfing could be not really anything. We need really a pattern and a confirmation like the next day, but it really didn't occur. In fact, we got something called an inside day. So now today's candlestick, the 24th of May, is now within entire range of the previous candlestick from 23rd of May. You can kind of see it, right? And this is an inside day, but you can also think about it as a triangle consolidation. And triangle consolidations are usually what's called a continuation patterns. So whatever the previous trend was, then once we get this breakout to the upside, it will become a continuation pattern. So when or if we break out to the upside, that would be the continuation pattern. Sometimes we have more than one inside day in a row, and that would be like several. So the triangle will basically extend itself. But for now, looks like it's a triangle, and it could be just a few days before we have a new records. I think all-time highs once again is not is something that we should be expecting in the bull market, which we have right now. There is no doubts about it. The only thing you really need to know is whether or not we just hit all-time highs, and yes, we have. That means we're in a bull market. So we need to look for only buying opportunities. We do not want to look for any selling opportunities or shorting opportunities. And once again, for now, there is really no buying opportunity. Ideally, we should be buying around the blue line. And currently, we're way above the blue line. So to get to that level, we need to pull back around 8% or so towards the blue line. At that point, we might get something similar to what we had back in October, November, and we might try to get in on the long side once again. So, but also it's not, set in stone that we will just break out to new records. Those triangle consolidations could also go down, could also resolve to the downside. So in that case, I think we're looking at a pullback if this triangle consolidation breaks down. So I think easily in that case, we're looking for a pullback, I would say towards the green line maybe. So about 3% down or so. And again, at that point, we might consider more aggressive trader might want to be buying around the green line, and you could have been correct. For example, here back in April, if you bought on close above the green line right there, you would have been very much correct. However, for my taste, it's not enough oversold. I like to see a deeper pullbacks towards the blue line. So for now, I'm basically holding, for example, my position SPY. I bought back in October of last year, and I'm still holding half of my position. I sold half in January because I thought this was the top. I clearly was totally wrong. So I'm still holding this position. Looking at high yield bonds, junk dead. High yield bonds are also hitting records or trading next to records. It's a good thing because of the correlation between high yield bonds and stocks. Here's J and K together with correlation coefficient down below here. You can see that correlations are very high. Usually the index spends this time in the positive territory. So when high yield bonds move together in lockstep with stocks, I think it's a good thing. We just hit all-time highs on May 16th here and pulled back a little bit. By and large, I think we're looking at bullish market, and any pullbacks should be bought. Let's look at a couple of trades that one of my subscribers did, and he is a options trader that prefers to trade, I think, very close to the expiration. So if you ever traded options, you will know that the closer the option is to the expiration, the more volatile it becomes. So here's what he did. He bought on the May 10th, he bought June 28 calls. So they're like a month and a half before the expiration. Very close in my opinion, but he knows what he's doing clearly. He bought calls for Groupon at $13 calls. So we're basically at the money. So we have, at that time, price was around $13. So he bought at the money options that were about a month and a half out. He bought them for $1.40 each. You have to multiply by 100, and it becomes $140 for one option. I don't know how many he bought. I'm not interested in exact profits, but I just want you to show, I want you to understand the methodology behind this trading. He did the same thing that I would have been doing with just regular stock. And when I send an alerts out, I send an alert, like for example, this alert on the 10th of May was for a stock, not for an option. And when I send an alert out, I set a target of, it's right around the green line basically. So when we got to the green line, we basically got our target, maybe even slightly earlier. But you have to understand that options move wildly bigger than the stock itself. So for example, notice that the stock, I mean, this is a volatile security, Groupon. It moved from around, let me see, from around $13 or so. Or rather, alert was sent at around $13.50, and it moved, the next day it moved 12% in one day. So on the 10th of May it was around 13.50 or so. Next day it was 15.30 or so. So the stock moved 12%, but you have to understand that the option moved 71%. He bought it at $1.40, and he sold them at $2.40 each. So, and notice what happened next day. It moved as high as 29%. So, if the stock moves like 12% and the option moves 70%, and then it probably was like 170% return if you sold them the next day. that's actually one of those situations where you're like, oh my god, I should have just kept it for a couple more days. But the expiration is very close, and this is the reason why this is a more advanced technique, I would say, to trade options that are so close to the expiration. You really need to know how to control your risk, because what if it went down? So normally when I trade options, what I would do is I would say, okay, so let's just pretend for a second that I have a $100,000 account, and I decided to trade this particular option. So how many options would I buy? And they're $140 each. So for a $100,000 account, I would be okay losing like $1,000, $2,000, $3,000, maybe $4,000 or $5,000, but it's already kind of pushing it, honestly. So I would buy that many options. Like I would buy, for example, 10 options, which would be a position of about $1,400. The good news is that options don't have upper limits. They could double, and then they could quadruple, and then they can go to 10 times its value. And the downside is protected. So let's say you only buy $1,400 worth of options, and they collapse, they go to zero. You are gonna only lose that amount, how much you bet, how much your premium was. You're not gonna lose exponentially more. So this is why I always recommend you always buy. You buy either calls or you buy the puts. I wouldn't recommend selling calls or selling puts, because this is where the unlimited liability comes in. And in fact, there were several instances a few years ago, I believe, with GameStop, when exactly that thing happened. Is people sold options. They sold puts, and they when the stock went to like it. Let me just show it to GameStop. I mean, they had another one of those situations. So it went from like 16 to 62. So this could be unlimited liability for you. But if you only bought options, then you will make that much, and if it collapsed against you, then you will only lose the amount of the premium. Okay, let me know if that makes sense. I'll make a comment in the section below. And this options trading is a little bit more advanced, but actually once you wrap your mind around it, it's quite rewarding as well. And another trade, IBM. This one is a little bit less obvious because it's such a small move, but it still was it's a tremendous profit. So here's what he did. It's the same client. I sent an alert out on 20th of May. How did I know to buy it here? So I only know what I'm looking at here, and I saw that the stock, it was above the blue, it was actually above the green line, and then all of a sudden it dropped below the blue line here. So I was waiting for some sort of a candlestick pattern which would be consistent with more or less the end of the bottoming pattern. And I kind of felt that this candle right there, I'm going to zoom in a little more, on the 17th of May, this looked kind of like a hammer candlestick. I also noticed the way this stock just kind of followed the blue line just very nicely, and then this sort of looked like a hammer candlestick right here on 17th of May, and I'm like, next day, oh, this looks good. So I went ahead and I sent an alert out on the 20th of May at around $169. So once again, he bought at the money calls. At the money meaning they were about where the stock price was. So stock was about 170. It was actually exactly at the money. And he bought them July calls. So I'm guessing some end of July calls, or one of the expirations in July, probably end of July. He bought them for $5.10, so you have to multiply by 100, so it's $510 per each option. So if you're trading options and you have a tiny account, let's say you have a $1,000 account and you want to buy an option which costs $510, you will be risking half of your account, and that is not acceptable. Okay, so you either must look for less expensive options, which could be further out, okay, or avoid trading options until you have a bigger account. I know it sounds kind of sucks, right? But in this game, basically, the more money you have, the less risk you can assume. Anyways, on the 20th of May, alert was sent out. He went ahead and he bought calls, at the money calls for $5.10, $510. Each next day, it just popped higher out of the blue, and it moved about 2.5%. But notice that the option went to $7.80, which is 53% above the buying price. He went ahead and he sold it, correctly so, because notice what happened yesterday and today we actually had a pullback. So always there is a danger, as in previous trade with Groupon, there's a danger of missing out, and then there's also a danger of not taking your profits and not keeping your profits. It's one of the worst things to a trader is when you have nice profits and then all of a sudden all of the profits evaporate because you didn't sell in time. So clearly this was a very successful trade, so congratulations. And if you need more assistance in trading options, I can kind of walk you through. There's all kinds of Greek letters such as delta and theta. Theta is a time decay, delta is how much the option moves up or down. So if this made sense, let me know in the comments. If this didn't make sense, again, let me know. So once again, we're buying options, we're not selling options. Let's switch gears. We're looking currently at dollar currency index DXY. Dollar currency index DXY. So for now, I think dollar is in an uptrend, even though we're just having this giant range. Really didn't go anywhere from like September of last year. Sort of went up, went down, went up again. Now we're a little bit again pulling back. But using my indicator lines, my bias is to the upside right now because we have closed above the blue line. And additionally, what I really liked about this chart is that we held the support at the red line. Not making this up. These indicators really are meaningful. So they bottomed at the red line and then we went higher. Latest signal was bullish for the dollar. Why do I care about the dollar and it being bullish? Is that because gold, this is gold on top here, and US dollar on the middle part, and on the bottom here in purple is a correlation coefficient. So by and large, if you can kind of just ignore this tops here, more or less gold and dollar move in the opposite direction. Okay, but occasionally they move in the same direction, and you can see that that means correlation is positive, so it is in a positive territory. In fact, right this instant we have a very positive correlation. We're at 72%. So 72% of the time, this is a weekly chart, when gold goes up in this case, dollar also goes up, which is an unusual situation. Usually it's the opposite. When gold goes up, or rather when dollar goes up, gold goes down, and vice versa. So right now we have this unusual situation where gold and dollar are moving in the same direction. Gold is bullish currently, but dollar is bullish currently, but so is gold. Here's gold on the daily chart. You can see we traded this security. The light blue ones are actual alerts, and purple ones are not actual alerts, but you could have used my indicators to trade them. So what are we looking at here? We're looking at gold making a possible double top. Again, possible double top. I don't know if it's actual double top. It does look like it might retest that top, so maybe we'll have a triple top, which people would say that there's no such thing as triple top. Maybe, but it does look like it's a very sharp pullback for gold, and I think it might just reattempt to move higher. If it doesn't reattempt to move higher, then a move lower towards the blue line would once again put us in a setup of potentially buying gold. My biggest concern again was with the dollar. If the dollar is going up, eventually these correlations will revert to normal, and gold and dollar will move opposite direction. We just don't know exactly when that's gonna happen. So I'm watching dollar very closely, especially in the past few days. Notice that we had a signal to buy on the 16th of May, and we moved higher, but today we kind of had a big red candlestick. So we're most likely going to retest this level at 104.4, and we'll see where that takes us, because if we don't hold here, then actually gold might benefit and we might see fresh records for gold. Alright, and let's wrap it up with natural gas. A few days ago to a few weeks ago, I pointed out this gap up between 25th and 26th of April, and natural gas moved strongly higher. And notice what happened now. We ran into resistance, but where? It's exactly at the blue line. Again, I'm not making this up. We touched this blue line on the 22nd of May, and again yesterday on the 23rd of May, and now we bounced off of it and moved lower. So is natural gas about to roll over with a vengeance, or are we about to break out into a new uptrend? What do you guys think? Let me know. What do you also think about gold and dollar? Gold will go higher or lower from here? if you have any comments about options trading, please let me know. I might be able to answer any of the concerns, especially this is a hairy kind of subject, and really you need to know what you're doing. So please, if you're not sure, make a comment. I'll try to answer the questions. Junk debt near the records and S&P near the records. What do you guys think? Will we see new records soon, or will there be a pullback? In fact, in the members only section, I'll be discussing several market breadth indicators which are somewhat concerning to me right now. So a pullback may unfold in the near term. Other than that, head over to MasterChartsTrading.com, click on sign up for one of the products. So again, I have the trading indicators, which you are seeing on this chart. You can trade pretty much anything under the sun on most time frames, such as daily, weekly, hourly, minute chart, etc. You just need to know which setting to use. Newsletters, I send out daily alerts as well as weekly members only videos. So this week we'll be covering this various securities, especially market breadths, and as well as many other securities. And I think the best deal, of course, is to get both trading indicators and newsletters. And as you have probably heard, I have added the yearly plans. You can buy both by credit cards, Apple Pay and GPay, as well as PayPal now. Monthly plans are also available, but they are more expensive. The yearly plans give you a 17% discount. I thank you again for watching all the way to the end. If you have any questions, make a comment, share this video, like this video. Thank you for watching, and have another great trading week. Bye-bye.